All right. It looks like we're live. Hello, everyone. Maneko 64 here, home of alternative economics and contrarian views. So, yeah, we're going to look at the sovereign debt markets, the government bond markets. I think they're signaling some trouble, a lot of trouble ahead for the economy, for the financial markets, for everything, for the stock market, bond market. Yeah, rapidly rising bond yields raise the specter of another sovereign debt crisis. And by another, I mean similar to what we saw in Europe in 2011, 2012. And this could be worldwide, I would say. Yeah, I'm a little bit early. I'm usually about 11 minutes early. So, we just chat before that, before 9 o'clock. Good evening, Gordon. Hello, Alan Hua is here. Alan Zibbelman is here. Richard Martin. Henrik Schoblom from Sweden. Hi, Henrik. Stephen Fleming. Alan Zibbelman. Salve Marius. Yeah. I saw earlier you said Salve Plebes, right? Or plebeians as well. Plebes or plebs. Alex Harris. Hi, Alex. Cupid Stunts. Evening, Marion, Billy, no mates, Billy Bullion, everyone greeting from Warrington, UK. DR looks like MBS market has frozen to it. Yeah, I saw that. There's a tweet from Cassandra, who was the guy from The Big Short. I forgot his name now. Yeah. I mean, yeah, the Treasury market, I would say, it's been happening since 2020. There's very little liquidity in U.S. Treasury. That means the bid and offer prices are very wide. Mortgage-backed securities is not as deep a market, but that's worrying. And I think we need to worry about treasuries, about the Italian government bond market, all these bond markets. Hi, Graham Hobbs. Nice to see you. Lee Doran from the Lake District. Nice part of the world, Lake District. Native American. Hi, Joshua Porter. Andrew Bevan. Hi, Andrew. Savio Toronto. Haley Burry, Ontario. Nicholas Tracy from New Jersey. Rickard from Sweden. Home of the deep state. Yeah, the Wallenberg, right? Wallenbergs. Actually, the Wallenbergs are the power behind George Soros. Everyone thinks George Soros powerful. I would say the Wallenberg family is even more powerful. BP is here. Mark C. from Essex. Dilwyn Roberts from North Wales. John O'Keefe from Honduras. Moonraker from North Carolina. Mr. Brozilla, appreciate your interview with John Adams. Yeah, I have spoken to John Adams before, and we keep in touch. He's a good guy, John. Oji, if you don't have order in place by now, you're way too late. I agree. Putin was talking about Peter the Great and how he took back Sweden after 21 years of war. Yeah, I mean, the Russians and the Swedes, they have been at war before. James Barnard, your views on forthcoming negative interest rates with the next Black Swan event. Yeah, the fourth turning, one of my clients when I was in the city, he was actually worked for Citibank in New York, and he worked for the Treasury. Very nice guy. Yeah, he even told me the story that he used worked for the Treasury part of Citibank, and he went every year to check the gold vaults at the New York Fed for some reason. But he told me about that book, The Fourth Turning. I think you mean The Fourth Turning. It's a good book. It's about generational things that happen every 80 years. And I think we are in the fourth turning. As for interest rates, we already have real negative interest rates, massively negative interest rates still. If the Fed cuts rates to negative, I mean, you're going to see commodities go to the moon, really. So that's the way I see it. Maybe that's why they're raising rates quickly now into a recession. So maybe they can cut. Who knows? Cat Cord, good afternoon. Carol Garrity from Ireland. B.R. Williams, hi, from Connecticut, says hello, Mario. Walter Lyons from Connecticut. Rick Enfed from Nebraska. David Buseman, why are the Italian bond markets important? We're going to look at that. It's very important because it's one of the biggest bond markets in the world, and all these countries, there's so much interconnection. If Italy goes, then you're going to have Greece, Spain, Portugal, Ireland, maybe even the UK, and it's going to be like a domino effect. We're going to look at that in a minute. We still have 5 minutes. I'm usually a little early. This is set up for 9 o'clock, top of the hour, but I go live a little early for those who are here early. P.S. Have you read Ray Dalio's book? No, I haven't, but I agree with what he's saying there. He says cash is trash, and I agree. The best cash really is gold, are gold and silver. They're real cash. What most people think is cash is a debt instrument, the Federal Reserve note. Ant says, evening, Mario. Korean silver stacker from Korea. Good morning from Mount Martha, Melbourne, Victoria. Billy Boy, Credit Suisse crying poor. Does anyone in the chat think the Fed is letting inflation rise to reduce the debt? Yeah, it's not just the Fed. For the government, yes. This is what governments are doing. They pretend they're fighting inflation, but they're actually using to make things, to pay off, to inflate away the debt. You're right. Of course, they're not going to come out and say that. Linda Compton from Spokane, Washington. Over here, every day we get closer and closer to whatever. Yes, it's true. It's true. But I don't think we should be scared or, worried. We just have to keep going and be prepared, because we know what's coming. We know that all currencies are sinking, all fiat currencies, the dollar included. Mark Sneed, Biden said he would not talk to tyrants. Then why Trudeau? Yeah, I know. They're all hypocritical, these guys. Mike G, yeah, no problem. I'll see you later, Mike. Olivier Leroy from Paris. Bonsoir, Olivier. Nice to see you. The great closet, buy silver and get rich. Yeah, silver, I mean, I'll say it again. Yeah, very undervalued. Someone made a comment earlier about how gold and silver did really well on Friday. They got hammered, of course, prior to the CPI and right after the CPI. And then everything imploded like stocks and bonds, but gold and silver went up really strongly, and so did the miners. So it is encouraging, but you never know. Hopefully, it will continue tomorrow. BP, how does a country get out of hyperinflation? How did Hitler get Germany out of hyperinflation? Hyperinflation is basically the collapse of the currency. And it takes about 12 to 18 months. It took in 22 to 23 in Germany. And then they just had to come up with a new currency called the Rentenmark, which they backed with gold. But Hitler wasn't around he only came to power 10 years later. So the hyperinflation had been gone a long time before. It's not easy getting out of hyperinflation. Well, actually it is. What's hard is getting out of high inflation. And maybe, hyperinflation is just like a total collapse of confidence in the currency. And it's actually a good thing. And the way to get out is to have a good plan after that. And the Germans kind of did. Elias Jones, thank you for your super chat. Would love a series of bimetallism versus gold standard. Yeah, I prefer bimetallism. I think it's good to have both. And I think some of the founding fathers in the US liked bimetallism, mainly because it gives more liquidity to the system. The general public with only gold is very deflationary, I think. But with silver as well, it helps. So it's 9 o'clock here in London. Let's start. There's quite a few of you already, 450. So the title of this live stream is Rapidly Rising Bond Yields Raise the Spectre of Another Sovereign Debt Crisis. So the reason this is worrying is because yields are rising rapidly. And that's not a good thing. And I'm gonna play these guys here. Hold on a second. I'm gonna share something with you guys. Some of you might have seen this before. This is why.
Roger.
That's your name.
Roger.
Good. And what do you do, Roger?
I'm a financial consultant.
A financial consultant, eh?
Roger,
Yeah,
yes.
Terrific. And Roger, how's business at the moment?
Not bad, thank you. Been a bit quiet lately.
Just to remind you, this is from 2011 when the sovereign debt crisis was going on in Europe. It was Portugal, Italy, Ireland, Greece, and Spain. Just listen to this.
What do you mean lately?
Since the war, been a bit quiet.
Fair enough. Okay, Roger, your special subject tonight is the economies of the European community.
Mm-hmm.
Your time starts now. Best of luck.
Thank you.
How much does Greece owe, Roger?
$367 billion.
Correct. And who do they owe it to?
Mostly to the other European economies.
Correct. How much does Ireland owe?
$865 billion.
Correct. And who do they owe it to?
Other European economies, mostly.
Correct. How much do Spain and Italy owe?
$1 trillion each.
Correct. Who to?
Mainly France, Britain, and Germany.
Correct. And how are Germany, France, and Britain going, Roger?
Well, they're struggling a bit, aren't they?
Correct. Why?
Because they've lent all these vast amounts of money to other European economies that can't possibly pay them back.
Correct. So what are they going to do?
They're going to have to bail them out.
Correct. Where are they getting the money to do that, Roger?
That's a good question. I don't know the answer to that one.
How much does Portugal owe?
Hang on a minute. What was the answer to that earlier question?
Just keep answering the questions, Roger. Where is Portugal going to get the money it owes to Germany if Germany can't get back the money that it lent to Italy?
Just a minute. What was the answer to the previous question? The question was, how can broke economies
Yes.
lend money to other broke economies
Yes.
who haven't got any money because they can't pay back the money the broke economy lent to the other broke economy and shouldn't have lent it to them in the first place because the broke economy can't pay it back?
You're wasting very valuable time, Roger. How much money does Spain owe to Italy?
$41 billion, but where are they going to get it?
Correct. What does Italy owe to Spain?
27 billion, but they haven't got it. They're broke.
Correct. How can they pay each other if neither of them has any money?
They're going to get a bailout, aren't they?
Correct. And where's the money coming from for the bailout?
That's what I'm asking you.
Correct. Why are people selling the European currency and buying the US dollar?
Because the US economy is so much stronger than the European economy.
Correct. Why is that, Roger?
Because it's owned by China.
Correct. And very well done. And after that round, you've lost $1 million.
I've lost $1 million. I thought you said well done.
Yes, well done. You've only lost $1 million. That's an
So let's stop that
Only
now.
lost $1 million.
Very well.
All right. So this was in 2011. And you heard how he said Italy and Spain owe $1 trillion. But that was back then. Those debts have ballooned. They have mushroomed. So, and then we're going to look at the yields for the Italian government bond market. So here we go. This is what the national debt in Germany is right now. It's 3.36 trillion. The UK is 3.3 trillion. Look at France, 3.6. Well, Italy, it's up to 3.8. Let's have a look at Spain. Portugal, 386. Spain is now almost up to 2 trillion. So this is in 2011. So it's getting worse. And the problem now with the interest rates rising is that government debts have gotten so big, and also government spending has gotten so big that the private economy, which creates the income, is being crowded out. So I'm going to show you this chart here that I actually saw someone tweet out this afternoon. So as you can see here, the problem that we have now is the debt keeps going up, right? And it's increased even more, right, since 2020. And the GDP is not keeping up. So we have so much debt, and this debt has to be serviced. That's why rising yields are such a danger. And especially if we get a recession, the red line is going to drop, but the debt is going to keep going up. So, and as you saw those two guys say, everyone owes everyone, money. And if Italy goes and, Germany's going to be in trouble, everyone's going to be in trouble. The UK is going to be in trouble. So I'll stop right now and look at some of your questions. I'll try to answer as many as possible, of course. Greetings from Lord Humongous. Hi, Lord Humongous. Who's on first? I love that, B.R. Williams, who's on first. Yeah, Watts on second. Kicking the can down the road. And I'm afraid the can is, it's going to be tough kicking it now, because the problem with the ECB is that they're saying that they're going to raise rates, but how can they raise rates and do more QE and bail them out at the same time? It makes no sense whatsoever. So let's show you the scary part now. If we haven't, you see, let's go look at the Italian government bond market, or the yield, the 10-year yield. So here we are. I can, let's see. You see, if you go back to the early 90s, Italian yields were almost up at 15%. And why do they come down so much here in the mid to late 90s? Well, because the central bankers, Goldman Sachs, they manipulated the Italian government bond market so that Italy could join the euro. They needed to converge. They call it convergence. So this was just how can I say? This was just it wasn't real, right? These rates here weren't real at 4%. You know, the Italian rate should have been a lot more, you know, but they basically manipulated to put Italy into the euro. And then you had the 2011 crisis started here. As you can see, rates were around 4%, and then they started exploding higher. And I'm gonna zoom out just to show you how bad it looked back then. So yeah, they went from below 4% all the way to 7.5%. And here's where Draghi came in and said, we'll do whatever it takes because it was going to go back up. So, yeah, after the Draghi moment, it drove yields low. It's ridiculous that Italy was paying less than 1% for 10-year money. And even until as recently as August last year, it was just around 0.5%. But look at it now. This is what is worrying. It's rising very quickly, as you can see. It's almost at 4. It's broken this level here. So I could very well see, that's why I can very well see it at 7 or even 7.5 very soon. And if the ECB intervenes, then all bets are off also for the Fed. If they intervene, it just goes to show that they can't really tighten anything. But eventually, though, I think we're going to go here to 15%. And that will be, of course, the end of the euro, the European Monetary Union. And Italy will probably go back to the lira. But in the meantime, I think it could create havoc in the Western economies, even in the US. Initially, the US dollar might benefit from this, but it's going to hurt treasuries as well, because treasury yields are going up as well. Treasury started the year at 1.5. They're now above 3%. And I'm going to show you the UK 10-year. The UK hasn't been rising. It's rising fairly quickly. It's still at lower levels compared to Italy, but I think it's worrying as well. You can see until August last year, we were below 0.5%, and we're already almost at 2.5. Just think of all the impact this is going to have on mortgage rates and the cost of financing, credit card loans, and everything. But the thing is that there's so much room on the upside that, this is just beginning. And if central banks want to stop this, they're going to have to reverse their rate hikes. They're going to have to do QE again. So I don't think there's a better place to be than in commodities and gold and silver in this environment. This is not a benign environment where interest rates are rising slowly to slow down the economy a little bit. This is just out of control. I think the markets are losing faith in the central banks, and that's why rates are rising so sharply. And the bond markets are saying that the Fed, the Bank of England, the ECB, they need to raise rates a lot quicker. So I'm going to stop here for a minute. Read some of your questions. Gordon Hamilton, diesel was selling for $2.50 per liter today. Wow. Where is that, Gordon? I mean, the other day I put some diesel and it was $2.03, but $2.50. That's ridiculous. That's gone up a lot. I mean, I put 75 pounds worth of diesel. I didn't get much out of it, but it was below 204. You're telling me now it's 250. My goodness. Aaron Levy, my power just went out, so here I am. I was watching Netflix. Okay. Matthew Lizzo, have you seen in China where banks are not allowing people to withdraw a certain amount of money? Yeah, I heard something to that effect. I mean, here in the UK as well, you know, if you go to the bank and say, I want to take out £5,000, they might have a problem with that. So it's not only in China. Bingo Wings is back. Conor McGregor, have you heard of David Icke? He seems to think that the global elites run the whole world and that COVID was a hoax. Yeah, I have heard of David Icke. Yeah, I mean, I wouldn't disagree with those comments. Oh, Lord Humongous. No, I don't want to imagine that at all. Christine Lizard Lagarde in the bikini. No. Thank you. Dylan Roberts, how can you have a one world currency in the middle of all these wars? I think it will be afterwards, I guess. Yeah, right now. Or there might be blocks of, you know, multipolar currencies. Matt Bittner, how walkable is your area? Can you walk or take? I walk a lot, actually, Matt. Yeah, I walk a lot, and I'm not far away from the shop, so I don't have a problem. I've been walking for the last 6 years a lot because I was diagnosed with type 2 diabetes in 2015. And I found that the best way to get that under control is to exercise. So nowadays, instead of taking my car, I walk, unless I have to go with my wife to do big shop. We'll take the car, but usually she does that. So yeah, and my golf club is a couple of minutes from my house, so I walk there as well, and I walk playing golf. By the way, today I played 36 holes, so actually I don't feel that tired, but I think I will be tired tomorrow. Teak Materi, thank you for your super chat. Just wanted to remind your viewers about counterparty risk. If you don't have something in your possession, you don't own it. Thanks again, Mario. Yeah, counterparty risk. That was the big thing in the 08 crisis, because once Lehman went bust, all the derivatives contracts, you know, when a counterparty doesn't go bust, there's no problem. But you know, Lehman collapsing, that, you know, that led to a daisy chain reaction, you know, derivatives failure. And that's why the US Treasury had to bail out AIG Financial Products with $150 billion, because Goldman Sachs would have lost billions from trades they had done with AIG Financial Product. So yes, you know, invest in mining and commodity stocks, and I do, but put like, I would say it's not advice, but I wouldn't put more than 20% of your savings in the stock market, be it even miners, and the rest, of course, you need to hold it. If you hold it, of course, there is no counterparty risk. Of course, there are other risks when you hold things, but it's less risky than having it in the bank. Tony Ellis, Mary, it's difficult for me to see your Sunday live, but I love your work. Keep doing exactly what you're doing. Oh, thank you for the feedback. It's good to know that. Theodore Doxford, how long do we have to save gold before it becomes unaffordable? Well, I think it's difficult to say how long, but once it breaks through 2020, the 2100. Well, actually, I would say once we break through 2000, we could be off to the races. So in terms of time, it's difficult to say, but I think we're getting closer and closer, of course. Bingo Wings, what do you think of the current supply of physical on the COMEX? I don't worry too much about it, but I do keep an eye out for what's going on. And I've seen that there's been a lot of silver taken out of COMEX and everything. I think all we need to focus is keep buying physical and try to avoid trading on the COMEX, and things will work out. The COMEX is not really a physical exchange. If push comes to shove, the COMEX will just shut down the exchange or suspend physical delivery and do, they'll pay cash, they settle in cash. So the COMEX is really a fraudulent exchange, and I wouldn't worry too much about it, even though it's important to keep an eye on it. Okay. What do you think on the current supply? Oh yeah, I read that already. Real dollars or silver? Yeah, you're right. I have some silver dollars here with me. I haven't got them out this evening. Craig Metz, please expand up on counterparty risk. Well, counterparty risk is basically if you take your assets and give it to someone to look after it. So if you buy shares in IBM, if you don't take delivery of the certificates and you leave it with your broker, that's counterparty risk. When you take your money and you put it in a bank, it's your money, but it's, the bank is the counterparty risk. So any asset that you hold with a third party has counterparty risk. Hopefully that will, make it clear for you. Andrew Novak, thank you for your super chat. Says one of my top 5 favorite YouTubers. Thank you, Andrew. Oh, Billy's just gotten up. I think he wants to come down. 1 second. Billy? All right. I think he's all right. Rich Mountains, thank you for your super chat. What is infinite liquidity? Yeah, someone showed me that. Well, infinite liquidity is how Wall Street and the City of London works, and that's why they had to be bailed out. It's a totally fraudulent, crazy concept. Basically, let's see, I've got this silver coin here. It's a florin, which is a double shilling. I think this one's from 1915, right? Silver, sterling silver. So what the bankers and brokers do, they say, I call, Merrill Lynch and say, I want to buy some florins. And they've only got one, but it said, oh, you can have 100. But, they won't deliver to you. They'll just say, don't worry, you can have 100 and it's in your account. It's just a lie. It's just a scam. And it's amazing. Someone, I think it was Mike from Rethinking the Dollar, when we were in the Mike and Mario show, he showed the clip of this guy saying, we can just provide this stuff. I mean, it's crazy. I didn't realize it's gotten this bad. Derivatives, futures and OT, over-the-counter derivatives, a lot of times they are infinite liquidity because let's say you open an account with a broker, you put $1 million worth of treasuries there, and then you buy 1,000 gold futures and more, and you just leverage, and they allow it to happen. And that's why things go crazy sometimes. and we have to bail these people out. Silver Sonic, thank you for your super chat. Hi, Mario. Did you see the news item on Friday that the BOE no longer considers the top banks too big to fail? Any thoughts? Yeah, I mean, that's pretty serious. I mean, I haven't really looked at the story, but if they have said so, then you have to worry. You know, we're supposed to have a. Let me just get him down. Come on, boy. Come and say hello. Let's see. There you go. Billy, say hello. Good boy. There you go. Yeah, so sorry about that. So the question was about the BOE no longer. I have to look into that because I saw something to that effect. But yeah, as I was saying, the FSCS, which is like the FDIC equivalent here, they're not backed by the government. And, you know, if there was a huge systemic crisis, that 85,000 insurance, that could go, you know, you could lose your 85,000 because they wouldn't have enough, because they invest in assets as well. That would work, you know, if a small bank went under here in the UK. So yeah, it is worrying. And the other thing they can do maybe is bail-ins instead of bailouts, you know, what they did in Cyprus. Gordon Hamilton, thank you for your super chat. Just looked it up. Mario, petrol is selling for $2.39 in Kensington. Wow. My goodness, this is really going through the roof. This is not good. Because last week, as I said, I put diesel at 203p or 2.03. Not Joe King, good evening. Thoughts on future of GDX, SILJ based on previous highs, etc. You know, all the mining sector, gold and silver, I'm holding in my miners. I think longer term, they're going to do very well. The problem with the junior miners is that when there's a correction in the markets, the move down is really sharp. But technically, I haven't really looked at the levels, but maybe I'll do that in the video. And the other thing as well is I think all commodities are going to do well, you know, in the next 10 years. I think we're just in the beginning of the bull market in commodities, and it started in, well, when we hit bottom in March 2020. And I'm going to recommend a really good article that I saw in on Zero Hedge. I'll show it to you here, and then I'll put the link as well on the chat. Yeah, commodity bull just beginning by capitalist exploits. And the interesting thing they talk about here, you know, they've done a lot of studying, and they said, let's zoom this so we can see it better. So I thought this was really interesting because most people think you only get commodities bull markets when the economy is doing well and things are going great. But look at this. Over the last 130 years, there have been 4 times when commodity markets became radically undervalued versus the stock market. 1929, late 60s, late 90s, and today. After each period of radical undervaluation, commodities entered into large bull markets and then proceeded to become radically overvalued. So I don't think we are radically overvalued yet. And this is what's interesting because the Keynesians don't seem to understand this. For example, had you invested in such a natural resource portfolio in 29, your return would have been 122% by 1940, which doesn't sound like much. but compared to the depression ravaged stock market, the returns were almost spectacularly good. Between 29 and 40, the stock market fell 50%. Also, the 1930s was a period of chronic deflation, and consumer prices fell over 20% from 1930 to 1940. In real terms, commodity prices and related equities offered real returns of 180%. Not bad in a period that included one of the greatest bear markets in history and a full-blown banking crisis that required temporary suspension of the world financial system. So there you go. I think this is a really good article for anyone really, but especially for those people who have miners and are concerned about the general stock market that could spill over. So here it is. Put the link. There you go. Lord Humongous, 1924 peace dollar. I think I have some 1922. I think I paid 20 pounds for them like about a year ago, but they're not an ounce. They're about 0.72 of an ounce, the silver dollars. Yeah, most people think silver dollars are an ounce. They're not. They're about 0.72 of an ounce. The silver eagle, 1 ounce silver eagle is an ounce, of course. Matt Bittner, if mortgage-backed securities are going no bid, what is going to do to housing? Well, I have to look further into that because I'm sure the Fed will try to stabilize the mortgage-backed securities market. But what it means, if there's no bids, that means that the price could drop sharply. And when bond prices drop, yields go up. So it could be horrific for the housing market. Scoobyism, container ships hold 4.5 million gallons of fuel. I read that because I think shipping also is going to do well, shipping stocks over the next 10 years, because they're going to move commodities around. And if commodities are in a bull market, shipping rates will be in a bull market. So I think shipping is good as well. This is not advice. This is just my opinion. Yeah, mortgage rates will definitely spike, Matt Bittner, because, if mortgage-backed securities are going through the floor, mortgage yields are going to go up. Yeah, they're going to spike. That's, bond prices go down, yields go up. Mortgage-backed securities are bonds. Urban Sombrero, how will Japan defend the yen? Well, Japan is playing a dangerous game because they want the yen to be weak, but it's getting out of hand. And why do they want the yen to be weak? Well, because they're printing money still. They're keeping, JGB yields artificially low. And of course, that's going to drive the JGB, the yen lower, because why, Japanese investors can get over 3% 10-year. And if they're going to go park a lot of their money, if they can only get 0.25 in 10-year JGB, they're going to go to the UK to get 2.5, to the US to get 3%. Maybe, to Germany, rates are now at almost 1.5. And to do that, they sell the yen and they buy these foreign bonds. So the only way, I'm not sure, they say that they want to save the yen, but they're doing it to themselves. The only way for them to save it is to basically raise rates, let JGB yields go up, but that would probably collapse even more our bond markets in the US and Western Europe, because then, the Mrs. Watanabe of the world, the Japanese saver, wouldn't be buying as much of our bonds. So yeah, it's crazy what's going on. Bifford, what is the difference between a treasury and a bond? Well, US treasuries are bonds, and they call it treasuries because it's issued by their bonds issued by the US Treasury. And you could have corporate bonds as well, issued by corporations, municipal bonds issued by municipalities. You could have mortgage-backed securities issued by mortgage lenders. And yeah, so there's no difference, between a treasury and a bond. And within US Treasury securities or bonds, from 1 week to 1 year, they're called bills. And then anything above 1 year, from 2 year to 7 year, they're called, from 2 year to 10 years, they're called notes. And then above 10 years, more than 10 years, they're called bonds. It's a little complicated. And then you have, corporate bonds as well. I hope that helps. Not Joe King. Thanks, Mario. Are we looking at another big short scenario? I know a lot of people sat on 200,000 worth of mortgage as low rate. Well, the thing is, the big short might not just be in housing, but it could be in stocks, bonds, in currencies. It could be the everything big short, because we've had an everything bubble. But when they had the big short in 08, it was just a housing big short, right? So it could be even worse. BP, have you seen the movie The Rollover? Yeah, I have. Do you think it would be as dramatic as the ending where people rush to the bank schools? But yeah, I mean, maybe not as dramatic as back then, but because there's a lot more control, the powers that be controls a lot more. But yeah, I think a dollar crisis will come from abroad when, foreigners, try to get rid of their dollars, and they, there's a flood of dollars coming into the US. And I think Rafi Faber made a video today about that the Japanese could say, we want to stop helping you guys in the West, and they start selling their treasuries, to maybe, because if the yen really keeps diving deeper, that's the only choice they'll have. So Japan could trigger that, this rollover. Scoobyism, yeah, high yield corporate bonds, they're going down as well. I think there's an ETF called HYG. Have a look at that. Christy Easley says, I think only the Federal Reserve buys US Treasuries. No, there's a huge market for treasuries. Yes, they have been buying a lot. They've kind of cornered the market, but all kinds of investors buy US Treasuries. JM, what are your thoughts on rate inversion? You mean an inverted yield curve, JM? Right now the three has 3 10s has inverted. The 3-year note has a higher yield than the 10-year note, and the 2-year is getting close. Usually that's that points to a recession. And why is that? Well, because banks usually borrow short term to lend long term. But if their borrowing rates in the short term are so high, they're not going to be doing that. So they won't lend to the economy. And that's why it's a sign of a recession. Lord Humongous, oil went to, I think it was minus 38. He's saying minus 47. Maybe it went to 47. I don't know. Mr. Brozilla, do you remember the recession of the early 80s here in the UK? There was a lot of riots in 81, history repeating. I agree. I mean, in 1981, I was still living in Brazil. I came here in 1992, but my wife is English and she was born, around the same time I was. And she remembers the 70s and that period. It wasn't good. I think it's going to be just as bad. We're seeing that we're getting more strikes now, like tube strikes. We're going to get rail strikes. Yeah, it's not going to get better, especially, with the cost of financing governments rising, bond yields going up. It's not going to be good. Dylan Roberts, where do you see yields heading the next 3 months? A lot higher, I think we could go to 3.5% for the US 10-year. For Italy, we could go to 5%. And for the UK, we could go to, 3.25, 3.5. And considering we're below 1% here in the UK last year, it's not going to be good. And H, in the event of a financial collapse, will the governments force people to give up their gold? Anything's possible, but yeah, you just have to be discreet and I don't know, here in the UK in the late 60s up until 79, they limited the amount of gold you could buy. I think it was just 6 sovereigns a year. In the US, of course, they had gold confiscation in 1933. But I think, a lot of people hid it. So, a lot of people volunteered to hand in their gold to the Federal Reserve Bank of their own, region. Even in Korea during the Asian crisis, South Korean housewives were giving their jewelry to the South Korean central bank. I mean, I don't think people are that. Hopefully, people have woken up now and realized that, you shouldn't do that. So I don't think they'll have an easy time doing that. Andrew Watson says the Royal Mail are going on strike as well. Yeah, there you go. Bifford. Oh yeah, the 2 reverse repo. That's 2.14 trillion. Basically, what that means is that the counterparties are commercial banks, like JP Morgan, the primary dealers that deal with the Fed. And I think it was last year, there are some capital rules in the banking system in the US, and you're not supposed to hold too much cash. So it shows that the banks are awash with, flush with cash, the big Wall Street banks. So what they do, they lend that cash every day to the Fed, so it doesn't show on their balance sheet. That's the reverse repo. Yeah, it just goes to show that monetary policy is still really loose. So what could happen if interest rates in the real economy start going up? A lot of these banks could lend the money to the economy, and it could be even more inflationary. But the other reason why maybe they're keeping it at the Fed is that they don't trust each other. They don't trust the economy because, the Fed isn't paying that much. They're paying just over 1%, I think. So why are they lending that money to Uncle Sam or, to IBM or whoever? Because they have no confidence in the system. Alexandros Sirambides, thank you for your super chat. I will tell you this, buy XRP Ripple. Its trademark registration belongs to filed in 2018 by Dahlia Rothschild. Well, I'm not sure, just because someone called Dahlia Rothschild has registered. I think I've seen that story, and the person that's Dahlia Rothschild, it's the Rothschild name is not even his or her name. So it's not even a Rothschild, I would say, but it's up to you. You're going to have a counterparty risk. Okay. The crack up boom. Is this the crack up boom? Not yet, because I think what they're trying to do now is to rein in some of their monetary largesse, but they can't do it truly, right? Because we're going to have a lot of problems. We're already having problems. We've got the NASDAQ down almost 30%. We got the S&P down almost 20%. We got bond markets down 20%. So any sign that the Fed, the ECB, the Bank of England are going to pivot, as they say, to lower rates, QE again, I think that will start the crack up boom. And the crack up boom is when people lose confidence in the currency and they want to sell it. But what people are telling me as well, it could have started. It could have started already, because for diesel to go to £2.50 in a matter of a week from £2, because I paid £2.03 last week. That's worrying. Crack up boom is basically when people don't want to have the currency. Demand for dollars, pounds, and euros plummets. And by demand plummeting, I mean the first thing you want to do when you get that currency is spend it, because if you don't spend it now, it's going to buy you less in the future. So yeah, it's difficult to say when it's starting, but I think it could be in the next few months. The Great Closet, why are silver miners not selling directly to retailers to get the premiums instead of saying? Well, a lot of these silver miners have relationships with financial institutions because they've helped them do their IPOs or financing. I think First Majestic sells directly. Maybe more and more silver miners are going to start doing that. Ken Close, wonder when inflation will cool down. I don't think it, probably won't until we have a total collapse of the currency, because unfortunately, I think the bankers and governments are trapped. If they try to stop the inflation, they will collapse the economy, and there will be, the protests we had during COVID, they're going to seem like a picnic in the park. So they're going to keep inflating. And the only time that will stop is when the whole system implodes. Either way, we're going to get a collapse, be it a deflationary collapse if they keep raising rates, or a hyperinflationary collapse if they start accommodating again monetarily. Brian Lescarbeau, have you ever requested physical delivery from Glint? I haven't, but I know viewers who have, and they didn't have a problem. So you could try, and it worked. So I don't remember who it was exactly, but I personally haven't. Let's get rid of some people here who shouldn't be here. Demo, yeah, let's get rid of some people. Echo says, Mario, I hope it's a mild winter. Me too. Knowing, knowing how things work, it could be Sod's Law. Bill Bifford, Turkey by definition is in hyperinflation, but Erdogan says he has a plan. Yeah, well, yeah, they have very high inflation. I don't think it's hyper yet. Yeah, Sarah Brown, deflation is bad for debtors, for people who have savings, and cash or gold even, it's a very good time. Yeah, governments are the biggest debtors, so they hate deflation as well. Dennis Kirstens, to whom do I sell my physical silver in a crack up boom? That's a good question. I mean, you could exchange it for things. You're going to have to find the ratio between an ounce and whatever you're going to exchange it for, or you have to check with your precious metals dealer. He or she might still be dealing. So I don't personally know. I haven't been in a crack up boom, but I'm sure it will be valuable to have. You'd be exchanging it, using it. Because if the currency is worthless and people don't want it, they'll surely take silver, though. What do you sell it for? Bobby Dazzler says, well, you sell it for whatever you need, but you don't sell it for a dying currency. Frank Pizzo, is that a brass Krugerrand? Yeah, it's a Krugerrand paperweight. Gold Investments gave me that, and goldinvestments.co.uk or yeah, they have those. I think it costs about £30. I have a promo code with Gold Investments. If you want to find their details, it's below in the description of all my videos. It's not a real Krugerrand. Mike E says, with Glint, every purchase involves sale of gold. This requires tax reporting. How is Glint useful, as it seems to me to be a tax problem? Well, here in the UK, unless you go over the capital gains threshold, there's nothing to report. I don't know how it works in the US. I'm not a tax advisor, but I've seen some people that are very happy with their Glint card. Brady Girding, what will pension funds start buying? Well, a lot of pension funds are obligated to buy stocks and bonds. So, you know, so that's a huge problem. A lot of them can't buy physical gold or silver or commodities. What they might do, they have to buy government bonds too, which is a real crime, I would say, especially now. But they might start switching to commodity stocks, to miners, and that market is so infinitesimal compared to the general stock market that it will really drive those prices higher. So that's what they could be doing. Matt Bittner, yeah, they are already trying to do that. They never learn. They will try to implement price controls, and it has always the opposite effect. It creates shortages, and it leads to higher prices. I mean, Nixon did it. They will all try to do it. Michael Kennedy, how much is physical silver in the UK? Yeah, the premiums are quite high here as well, and we have VAT. But yeah, it's about maybe 30% premium, 25 to 30, sometimes more. Keith from Arizona, what is the significance of 64 in your channel? Yeah, I was born in 1964, and Monaco is, my dad was Mario as well, and my surname is Ineco. So I always had a nickname. I was called Monaco instead of Mario because my dad was Mario. So I used that, Monaco 64. BP, what would happen to markets when or if the Fed announces it would reverse course on rates? Yeah, it would be huge. And they'll probably won't announce they'll reverse. They'll announce they're going to stop raising. Even that will be significant because then the next move will be to cut. Like I said, we could have a crack up boom if they were announced that. Low blood pressure, Mario. Are libertards easy to get in London? Yeah, they are. I mean, I have 1 ounce libertards, quite a few actually. I got years ago, but you can get them in London too. I think yesterday there was a coin expo in London. I didn't go to it. I went to the last one last year. It was in Bloomsbury in central London. So they probably had a lot of different coins there. I didn't really feel like going yesterday because yeah, just didn't. Honig, yeah, my surname is Italian. Well, in Brazil, there's a lot of people of Italian descent. So yeah, a bit like in the States, or even Argentina. We got 3 minutes to go. John Kelly from Montreal says hi. Yeah, the Fed is between a rock and a hard place, and all the other central banks in the world. Maybe not the ones that have, countries that don't have much debt. Look at Russia. Their national debt to GDP is below 20%. So they're in a good fiscal situation. Yeah, the BOE is going to raise by 50 basis points. I think it's Thursday now. They're going to raise to 1.5. I think it's already pretty much priced in. Joe Moore, how many languages do you speak? Well, I speak Portuguese as my mother tongue. I speak, English, of course. Probably speak English better than Portuguese now. French, Italian, and I do speak some German. So yeah, about 5. Spanish, I don't really speak Spanish, but it's very similar to Portuguese, so I can understand that quite well. Yeah, not quite 7, Brady, but 5, I guess. If you add Spanish, that would be 6. The problem with Spanish is I mix up Portuguese and Italian with that, and it gets a little bit tricky, but I could communicate quite easily in Spain or a Spanish-speaking country. Blast from the past, Brazilian economy is not doing well. Maybe the numbers look good, but the general public is, they're having the same problems we're having here with the cost of living. And it's more accentuated there because their standard of living is not as high, but the price of petrol or gasoline is pretty much the same. So in Brazil, they're paying almost half their wages to just fill their tank. Scott 49-140. Is it okay to send the coins and metals dealer cash in the mail? They say no. They say on their site it's one of the ways to pay for florins, etc. I mean, you could, but someone just said that the Royal Mail might go on strike. Yeah, but I've never done that. I usually pay on the phone with a debit card, or I go there physically. If you're near Bromley, you can go there. P.S. Thank you for your super chat. Where might be a good place to live when SHTF? Which countries load that? Do you plan to move out of the country when it gets closer to that time? I guess my parents moved from Brazil in the 80s to Switzerland. Brazil was a mess, and it was a good move, I think, for me and my sisters to be outside Brazil. But right now, I think there's that old saying that the grass is always greener. So I'm not sure. Some people talk about maybe Latin America and even Central America, because they're not as regulated, the governments aren't as efficient there. But I think if you know what we were talking about, I think you'll be one step ahead of everyone. So I think you could be okay. The south of Brazil sounds good, like Matt Bittner says, but it's a big move. It's a big move, and even though I grew up there, I've been here for 30 years almost now, and I'm used to it. But never say never, though. I'll take just one more question here. Conor McGregor, do you think the BOE will raise rates by 50 basis points? Yes, I do. They will raise by 50 basis points. I think they raised by 15, then 25. But I was reading something into the effect that it's priced in almost 50 basis points. All right. Would I move to Sicily? It's funny because I know a guy from the golf club. He's English Italian, and his parents are from Sicily. And I was looking at the little place up in the mountains in Sicily that his parents have a place, and it's really nice. But then COVID started, so everything's up in the air. But yeah, Sicily is a nice place. Anyway, thank you, everyone, and I hope you enjoy the rest of your weekend, and I'll talk to you tomorrow. And if any of you are new here, think about subscribing to the channel. Yeah, and I make a video every day for those who don't know.